Welcome to the Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. When we think about the roaring 20s, nearly 100 years ago, I think we all think of a decade of growth and celebration. And there were really two reasons for this. One was the end of World War I, and the second was the end of the Spanish flu pandemic. So while we don't have the end of a major war, which is a good thing, it looks like we might be coming close to the end of the pandemic. So is this enough to get us back to the roaring 20s again? So here to help me find out is Jerry Herman, a Chartered Financial Analyst and the head of our investment committee. So Jerry, let's start with what we saw in the first quarter.
Thanks, Jim. It was a solid first quarter. The S&P was up 6.2%. The Dow was up 8.3%. And according to MSCI, the U.S. market led the world among developed market and emerging market indices. The Russell 2000 was actually up 13%, and a sign that small cap stocks are recovering.
So in the driver of much of this growth is growing vaccine numbers. So year to date in the United States, over 66 million people have gotten the vaccine, which is about 20% of the U.S. population.
Right. What we're really aiming for here is herd immunity, either by having been infected by COVID-19 or receiving the vaccination. Prior to the recent setback, estimates called for us to be on track for herd immunity sometime in the spring or summer.
So with the herd immunity on the horizon and likely lifting the restrictions this summer, it's no surprise to imagine that a lot of people will be traveling, making purchases they may have held off on, and generally heading out and celebrating.
Right. There does appear to be significant pent-up demand, and the wherewithal to spend actually seems to be there. As of February, the savings rate in the U.S. was 13%. That's double the historic average. So consumers do seem coiled for recovery. People would be able to travel, go to movies or sporting events or concerts, things they've really craved over the course of the last year.
So financially, consumers are certainly poised for a recovery. But what about some of the new technology that's been adopted during the pandemic?
Well, I think it's fair to say the pandemic accelerated technology evolution. In addition to e-commerce of all sorts, look at technologies like digital communication, work from home, web conferences, artificial intelligence. Many people were hesitant to use these before the pandemic, but necessity is the mother of innovation, and millions of people had to adopt these technologies and actually like them.
I know, and many of our clients did as well. So what do you see for the markets going forward?
Well, much discussion has been about a so-called K-shaped recovery, with some styles and sectors benefiting and others suffering. We've actually seen the tech sector and some hyper-growth stocks pull back in recent months, and there's been a shift to value as we've seen the recovery get underway. I think we'll continue to see some market rotation towards cyclical value stocks, and after underperforming growth for a prolonged period of time, we could see value stocks do better than growth this year, especially if interest rates rise.
So Jerry and the investment committee review all sorts of research and information to help our clients make the best decisions for their portfolios. So if you want to know if your portfolio is properly positioned to take advantage of these trends, give us a call. Here's Chris Wallace.